This is your quick Grand Rapids home pricing trends and predictions for the upcoming years. Real quick, I want to just show you a couple of charts. Listen, this chart goes all the way back to 2013, and you see this jaggy line that goes up, 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 up. Every one of those dips is and troughs or peaks and troughs is a year. So every one of these lumps is a year. Let me just smooth that out for you, starting from 2013 all the way up to 2025, beginning of this year. Let me smooth that out though for you. Essentially, this is that trend line. This is what property values have been doing since 2013. The average price point was 135. The average price point now is 409. So I know a lot of people who are out there saying it can't go any higher. Surely the crash is coming. Well, here's the problem. I'm going to show you this other chart. This is a chart of the months of supply of housing. What is month supply? It means that if no other houses came for sale, how long would it take based on our current sales rate for every house that we have available on the market to be gone, right? So you see here in 2013, we had almost 5 months of supply. Now that would be considered a buyer's market. You come down here to 3 months of supply where it hits right here in June of 2015. This is considered a balanced market, right? Where there's 3 months of supply. Just historically speaking, that means there's about as much advantage to buyers and sellers. The negotiations are not skewed in one direction. Everything below this is considered a seller's market, which is what we have been in for a decade. We have not come out of a seller's market. You can see the bottom 22 we had 0.6 months, not even a month of supply left. Things were and what was happening in that time was crazy. You couldn't keep a house on the market for more than a few days. And what has happened though, up till today, we now have 1.5 months of supply, right? So it's an improvement from here. And it means that when this was a crazy seller's market, you couldn't really negotiate much at all. There's a little bit more margin here. It's a little bit more calmed down, but nevertheless, there's still only 1.4 months of supply. And so going back to, just take a look at sales prices. This trend isn't going to settle down. We're not going to see a reversal on this trend until we see the supply flipped. Because as long as there's less supply, that's talking about market demand. And until demand turns to where there's not enough demand, that's what will cause housing prices to go down. So there's not a sign that that's happening in Grand Rapids. Other parts of the country, yes. Is the growth predicted to be as aggressive as the last few years? No, not necessarily, but it's still predicted to be growth. You can see this line. It's pretty constant. We had a real acceleration here and here. But in general, this is a pretty smooth line, and that is expected to continue. Maybe a slightly flatter section like this one here. But Grand Rapids is still a very, very good bet. Lots of good things happening here. So it is a good time to buy if you want to buy in Grand Rapids. Grand Rapids is a good bet, and it's better to buy than not buy. If you're thinking, I'm going to wait for prices to go down, there's just no signs that that's going to happen. So if you're thinking about buying, that's where the market's going. Sooner is better than later. Have a good one.